Have you ever watched a movie where a character, surrounded by glowing screens, makes a fortune in minutes just by clicking a few buttons? It looks exciting, right? Like a high-stakes video game. I remember when I first saw that, I thought, is that even real? Well, that's the Hollywood version of what we're talking about today, day trading. But the reality is a lot more nuanced, requires a ton of skill, and is definitely not a get-rich-quick scheme. So, let's pull back the curtain and understand what day trading really is. Hi everyone, and welcome to the channel. Today we're diving deep into the world of day trading. By the end of this video, you'll know exactly what it means, how it works, and what it takes to even consider getting started. So grab a notebook and let's begin. First things first, what exactly is day trading? The name gives us a big clue. Day trading is the practice of buying and selling financial instruments like stocks, currencies, or commodities all within the same trading day. The goal is to profit from small price movements. A day trader doesn't hold any positions overnight. They open a trade after the market opens and close it before the market closes. That's the core principle, all in and all out in a single day. This is very different from long-term investing, where you might buy a stock and hold it for years, believing in the company's long-term growth. Day traders aren't typically concerned with the company's 10-year plan. They're focused on its price action right now, in the next few minutes or hours. So, how do day traders actually try to make money? They use a strategy called speculation. They're not investing in a company's value. They're speculating on the short-term direction of its price. If they think a stock's price is going to go up, they'll buy it. This is called going long. They'll then try to sell it a short time later for a slightly higher price. If they think the price is going to go down, they can short sell it. This is a bit more complex, but it essentially means they borrow the stock, sell it, and then hope to buy it back later at a lower price to return it, pocketing the difference. Because these price movements can be tiny, just a few cents, day traders often use leverage. Leverage means borrowing money from their broker to trade with a much larger position than their own capital would allow. This can amplify profits, and this is a huge, but it can also amplify losses dramatically. A small move in the wrong direction can wipe out an entire account if you're not careful. Let's look at a simple example. Imagine a stock, let's call it Tech Corp, is trading at $10 per share. A day trader, based on their analysis, believes the price will rise soon. To make these split-second decisions, traders rely on a whole toolbox of resources. The most important tool is a trading platform. This is the software provided by a broker that gives them access to the market. Professional platforms offer real-time data, advanced charting tools, and fast execution speeds, which are absolutely critical. Next are charting tools. Traders live and breathe charts. They use them to perform what's called technical analysis. This involves looking at historical price patterns, using indicators like moving averages or the relative strength index RSI to try and predict future price movements. They're essentially looking for clues in the data to tell them when to buy and when to sell. A fast and reliable internet connection is non-negotiable, as a few seconds of delay can be the difference between a profit and a loss. Finally, a constant stream of financial news is vital to stay aware of market-moving events. Now, we need to talk about what might be the most important aspect of day trading: psychology. This is where most aspiring traders fail. Day trading is an intense, high-pressure activity. You're dealing with your own money in real time with the constant risk of loss. The two biggest emotional enemies of a trader are greed and fear. Greed can make you hold on to a winning trade for too long, hoping for more profit, only to see it turn into a loss. Fear can cause you to panic and sell a position too early, or worse, be too afraid to enter a trade that your analysis says is a good one. Successful traders are disciplined. They have a strict trading plan with predefined rules for when to enter a trade, when to take profits, and most importantly, when to cut losses. This is called a stop loss. Managing emotions and sticking to your plan, even when your heart is pounding, is the key to survival and potential success in this field. So, is day trading right for you? It's crucial to be honest with yourself. It's not a hobby. It's a serious, full-time profession for those who succeed. It requires significant capital to start, not just for trading but also to cover your living expenses, as you're unlikely to be profitable right away. It demands a huge time commitment, not just during market hours, but also for research, practice, and education before and after. and it requires an incredible amount of emotional resilience to handle the stress and the inevitable losses. Most people who try day trading actually lose money. It is not a path to easy wealth. The reality is that it involves rigorous analysis, unwavering discipline, and constant learning. If you're still curious after hearing all this, the best first step is education, not depositing money into a trading account. Read books, take courses, and most importantly, practice with a paper trading account. This is a simulator that lets you trade with virtual money in a real market environment. It is a risk-free way to test your strategies and see if you can be consistently profitable before ever putting real money on the line. Treat your paper trading as if it were real. If you can't make a profit with fake money, you definitely won't with real money. So there you have it, a realistic look at what day trading is. It's far from the glamour you see in movies. It's a challenging profession that demands skill, discipline, and a deep understanding of the markets and yourself. I hope this gave you a clear and balanced perspective. Thank you so much for watching. If you found this video helpful, please give it a thumbs up and consider subscribing for more educational content. Let me know in the comments if you have any questions or what topic you'd like to see next. Until then, trade smart and stay informed.